Broadcast is now starting. All attendees are in listen-only mode.
All right. Hey guys, could someone please use the questions panel and let me know if you can hear me? Oh, hey Tracy. All right, good. Let's give it a few more minutes and then I'll get started. Okay, let's go ahead and get started. I think we have a pretty good number of people now. So thanks all for joining and welcome. I don't have any prepared um, anything prepared for this meeting, so we'll just go over everything and then get to questions at the end. Okay, so okay, so first the site. I'm in calls with Rich and Tech, so that we're trying to figure out what is the best way to simplify all of this indicators, because you've got a lot going on right now. If you go to core, you've got odds, Nile one. I mean, there's a lot of information here. So we're going to try and see how we can streamline everything and make things a little bit more simpler. I know that it's overall a little bit overwhelming for whoever comes new into the room. So I'm going to try and get it as simple as possible, and possibly even have our tracking spreadsheet embedded somewhere in one of these pages. So we'll see how that goes. It's going to take a while to do it, but right now the plan is to keep both the primary and the complementary signals. Just have to figure out how we're going to do that. So just for those who are asking about it, we're going to keep it for now, but we'll have to see um, how exactly everything can be managed. Obviously, there's a lot of information in here, so I'm going to have to see how to streamline everything. Okay, so that's that. Um, so coming to the what all we have here right now. So for the new members, what I would suggest is that just follow what we have on this page, that is the trading signals. Don't worry too much about the core indicators and all of the different indicators that we have for now. But then over time, we can slowly start getting into things in detail, and that will help overall your understanding in the market and also in what the system is actually doing. But right now, focus on the trade signals, set up alerts. Just it's very simple. Enter when the alert comes out, exit when the exit alert comes out. Right. So let's go to what the market is doing right now. Okay, so we just really I call this kind of movement just balancing or consolidation. It's just it's pretty range bound. It's basically digesting the big move that we had so far. This is not bearish at all. If you're just consolidating in a range like this, it is just building power for the next move out of here, out of this range. We might test the zone just below here into 3430, but I'm not expecting more than that at this point of time. We do have, I think we do have at least some more upside ahead, possibly into the 3500 range, maybe even as far as 3550. But again, we don't need to really worry about that. We just stay long as long as our indicator is staying long. Okay, so that's it on price. Okay. So this is the Thinkorswim platform. I use this for analysis and looking at charts and interactive brokers for actually trading. So interactive brokers is not that great. It's not that user friendly. So that's why I don't use charting on here. But for trading, it's the brokerages and all are like really low. So it helps to um, keep my trading on this one and all the charting on this one. You can also have Thinkorswim. You can either open a small account and then use the platform, or on TD Ameritrade, that is, and use the platform, or you can even open a demo account, but you will have delayed data only on that. So it's in here. If you go to this page, I've got this is the Nile 1M value, which is basically new highs 1 month minus new lows 1 month. So it shows the value in here. It's 622. That is today's current value. So if you can actually go to different time frames and then see what's happening. So the micro 2 is shown here on the hourly time frame. It went to a buy on Monday, I guess. Yeah, it's still on a buy. It keeps on going higher, so we're fine there. We can go to a daily version, and this shows the core indicator. That also went to a buy yesterday. Okay. So that's the Nile 1M, which is the main indicator that we use in the room. And I also look at the AD, which is advances minus declines. Dollar AD is the symbol. So you can put that also in there, and it kind of gives you a little bit of information about what is happening to the market. For example, today, if you look, we opened up really strong at plus 1600, and we are at minus 30s right now. So that is actually a bearish indication, but we can correct on the fly also, because if you look at what is happening today, the small caps are down. I think it was up more than 1% at the open, and it's now really close to flat. While on the other hand, Nasdaq is up 1%. So it seems that we're kind of rotating, correcting on the fly. So I don't see anything too bearish over here. Things look okay. Right? That's and price is holding strong on ES and or SPX, right? So it looks fine over there. Okay, so that's it for intraday. Okay, let's just look at the wedge also. I posted this today morning. So when we broke out of this wedge, even before we broke out of this wedge, I was posting about this as a potential pattern. And so far, it's been playing out really well. So what the wedge does is that wedge is basically a constricting pattern, and we break out of the wedge. Usually what happens is that we return to the starting point of the wedge, which is around here, which is basically a double top, right? So that's why I was talking about double top as potential target, and then what happens there, we'll have to see. We either top out there and pull back, or we just power through. We don't know right now. So, but that area of the earlier high, 3550 to 3580s, that's where we have target on this particular move. And you can see how well things worked out in the last two the triangle patterns. It broke out, consolidated for a few days, and then just went on ahead. Both of them met their targets. This one met its target and then fell back down. This one met its target and then just kept on going. So we'll have to see what happens here. It either meets its target and pulls back, or it just keeps going. Um, and again, it doesn't really matter to us. We have an idea of what the targets are based on these technical patterns, but we're not really trading for that. We're trading based on our indicators, but then it still helps to have a certain idea about how long this will go, at least from a minimum target kind of perspective. Right. So that's it on the technical patterns. Okay, so zones. I get this question a lot. Okay, the zones, right? How I draw them? It's not really that complicated. It's just based on areas of previous resistance and support. For example, over here, we kind of based out over here. We tested this area several times. This was also a previous area of support, so that's why I have this as an area for support, right? And then when we come up here, this zone is resistance because this area of here is resistance. But once we get through that, it becomes support. So it's just basic technical analysis, right? So we came down here, we tested this point. So this now is a zone of support. So that's why when we come up here and then we came back down here, that area gets tested and it's bought, right? So the market has got memory. It participants know where we bottomed the last time, so that point gets bought again. And so now all of these zones that keep on getting tested and go into, for example, right, if you see over here, this is where the tweet came out. I was even telling somebody at the time, okay, how come Trump knows the exact point, 34.20, 34.25? I was posting at that time that is resistance. That's the exact point where the tweet came out and we sold off, right? And then when we reach that point again, you see what happens here. It touched in, it balanced out, it created a zone, and there is obvious buying that's happening over here. The market just doesn't go up or down. There are participants behind it. There are buyers and sellers. So then it went through, tested back again, created some kind of now this is support, right? So then it went through. So if it comes back down here again, for anybody who wants to buy for intraday, that is support. It can be bought if it comes down, right? So that's how the zones work. It's just simple resistance and support, but it can help you in your trading if you want to like get in and get out, or if you are not at all in the market and you're looking for an entry point. The zones give you pretty good intraday points to get back in or even get out if you want to trade in and out, right? So that's what the zones are. Okay, so let's go to the charts. Okay, so the razzmatazz waves. So what the razzmatazz waves are, I mean, we don't really use this in our trading, but it kind of gives us a little bit of context, maybe from a directional perspective on what to expect, highs and lows. I don't use it a lot in my trading. It's just information. Some people use it more, some people don't, which is fine. For example, today, right, this is showing a high. um, it may be a high, it may not. We can have all of these points change overnight and keep going higher. We don't know. So it's just an idea. I pay more information, more importance to the actual data. For example, if you look in my daily reports, you'll see that we ticked higher, we ticked lower, and I have an interpretation in there that says whether the data is bullish, bearish, or neutral. If you look at that, you actually get more information, in my opinion, than the highs and lows. So, for example, the whole of this week we were bullish, and obviously the market has kept going higher. So, based on that data, we can kind of get a sense of what the market is going to do for that day. And when we see it getting bearish again, then we know that it's time to be a little bit more cautious, right? But apart from that, the timing points also do help. Um, for example, if you look at over here, right, we had a general uptrend in both of the RASs, and then from there we kind of were going down, right? And then again, right now it's more or less sideways, so maybe that's a B wave over here. We don't know. So that's the information that the RAS gives. The RAS is nothing but ES options put call ratio plotted against time, right? And the daily RAS is the Monday, Tuesday, and Monday, Wednesday, and Friday options plotted out. The short-term RAS is the weekly consolidated value plotted against time. Right? The short-term RAS is a little bit more stable. The daily RAS will be more volatile. Okay, so that's the short-term Erasmus wave. The SGPCR is the overall put call ratio plotted against ES. This one I just shared in the weekend reports. So 2.2 is kind of the a value that we look at, because whenever we fall off of 2.2, the market has a crash like move. So even after the last crash like move, you're still not gotten back above 2.2, right? So market is still vulnerable to bear moves, but until we get back above 2.2, if we get back above 2.2, then things are really strong. Even last time we kind of got close, but then it fell again. So we'll have to see what next. Right now we are at around 2 point something. So we're getting close again, but until we get back above, we cannot really say that the bulls are in the all clear yet. Okay. So next is the long-term Rassmann wave. The long-term Rassmann wave is an extension of the SGPCR chart. It shows what to expect on a monthly time frame. This one I really don't give much importance at all, because I find it's okay to have a kind of an idea. For example, over here, if you see it's showing a top in August, which is fine. We haven't really exceeded the earlier top, so it's fine. But then it does not really help us in our trading. It's just an idea, just a good to know. That's it. So right now it's pointing lower into January expiration. Okay, so let's look at the Nile 1M chart. So the Nile 1M is the core of our trading system basically. So I track all of this in Excel itself, because it's easier for me to do everything in Excel. It gives me a hands-on idea of what the data is, so it helps. But you can do this in Thinkorswim also. So basically, I put in the Nile 1M values every day, and kind of calculate what we have for the cutoff values and all of that in here. And this is basically the micro one. It shows that it's green. Today I have this as a cutoff, that's why it's false. But then this is on sell, it went to a buy, it's sell again, then it's a buy since September 28th. Okay, and this is the overall chart, or the daily chart, that I share every day. It went to buy yesterday. um, So micro one is basically the delta between these two values, just to put it in a very simple way. And micro two, you already saw it on the chart. So the micro one, micro two, and the secret indicator, those three are the three indicators that form the composite signal. Okay, so we looked at the micro 2, the micro 1, and the secret indicator combo. This is a secret indicator. It's basically the red dots and the white dots have to be pointing in the same direction. So it went to a buy somewhere around here, and it's been on a buy. So this tracking sheet is what I share every day. So the composite signal rules is that 2 out of these 3 indicators, that is micro 1, micro 2, and SI combo, 2 out of these 3 need to be on a buy. And if so, the composite goes along. right? Or two out of these three need to be on a sell and the composite goes short. The odd signal is proprietary, but the idea is that we need both the composite and the odd signal to be pointing in the same direction for a primary trade. So right now, both of these are long, so we are long, right? If both of them go short, we'll be short. There are a few variations in here to the complementary signal, but I'm not going to go that into now. We'll just look at the primary signal. Primary signal is that we need both of them pointing in the same direction, and then we'll also position ourselves in the same direction. So right now, both are long, so we are also long. Okay, so the way that you read the sheet is that this is 708 is yesterday's value. So today's value is that we just needed to stay above -2 to continue the buy. And as you can see, we are well above that, so we are still on a buy. Micro 2 does not really have a trigger, but then you can see that on the chart. The SI combo value, this is yesterday's value. So today we just needed to be about 33.73 to continue the buy signal. Right, so this is the trading parameters, and the other sheet that I share in the reports is this one. This basically just shows you the consolidated look at all the signals, right? So this went to um, two out of three went to a buy on the 28th, right? And it's still on a buy. Micro 2 was a little slow. It usually is. It went to a buy on the 5th. The SI combo had a whipsaw over here, but then we were okay because we still had two on a buy here, right? So that's why we have been long since the 28th on the primary signal until right now, right? And odds was actually long since I think around here. That's because we have the actual trade as long, which is the complementary signal basically. But this is how it works. It's only over here that we had the primary signal trigger long. Okay, so all of this is shared in the reports. So this is basically what we just looked at right now, and it tells you, okay, the composite signal is long, odds is long, so our position is also long. Okay, so those are all the signals. I think we looked at everything related to ES. So we can have a quick look at GDX. No, I didn't look at this today. Okay, so this is GDX high-low, which is basically the one of the ones that we track in the core signal table. So it went to a sell on 921. It's still on a sell. It's not gone to a buy yet, but it started curling higher. If we go to USO, it's like really slow. Okay, so USO also just continues on a sell. It's not even close to a buy yet. So this the GDX and the USO, these are the two signals that you see being tracked in the um, core table, the core indicator table. I don't trade GDX or USO, but if people want to trade it, the signals do give you some idea on positioning, and USO has been really good over the last few cycles. GDX, usually the buy signals fare much better than the sell signals. So if you get a sell signal, I just exit and wait for the next buy signal. USOHL has been doing well on both buys and sells. Okay. Um, what else? Similar to the ESRAS, we've also got the GDX RAS and USO bonds, everything. But the same, it's the idea is still the same for all of them. It just timing points, highs and lows. Again, it's just a good to know. It obviously doesn't work out all the time, and some of them are more reliable than the others. I don't know why it's not pulling up. Okay. Okay, I don't know why this is not. Okay, there it is. So if you look at the GDX RAS, it had a high around the 5th of October, and it's generally pointing lower into next week. So I don't know if it's gonna play out exactly that way, or the low came in a little bit early because we're up today. So we'll have to see how that plays out. But right now it looks like a low into next week. And from there, you've got a really big spike into the end of October. Some people trade by this, I don't. But it gives you some idea on if you want a position from a timing perspective. Okay. So that's it on. I think I covered pretty much everything. If there's anything that you guys want to go over again, or that you think I might have missed, use the questions section, and can you type it out there if you want to go over anything again. I see I already have a few questions. Average percentage of risk that I take on different type of trades. Okay, for primary long, I actually posted this in one of the um, threads yesterday. So for the primary long signal, uh, I take I take around 3% of risk. So when you say 3% of risk, that is if you have a 100K account, my risk on the whole trade will be $3,000. So that's what 3% risk means, right? So you need to use your stop and your entry point, collect, okay, what is the maximum possible amount that you could lose, and then go up from there. That's how you take the risk. So I take 3% of risk for the primary long, and for the primary short, I take a maximum of 2%, but it's usually closer to, it's usually a little less than that. For the C, for the complementary, it's usually 1% or even less, right? So let's say right now, both the complementary and the primary are long. I don't have more than 4% risk. Right? And usually I'll be throwing a few hedges here and there, so the risk is going to be less than that, right? So, but then as a general idea, it's 3% for the primary long, and close to 2% for the primary short, and 1% for the C signals. Okay, but what I would suggest is that if you are new, go lower than that. I would keep it at maybe around 2% for the primary long, 1 or 1.5 for the primary short, and 0.75 or something for the C signal. The only reason why I say that is that you've got to build in confidence on the system and also build in some equity. So start slow, start small, and once you have a little bit of buffer, you can take a more risk, right? That's how you build confidence. That's how you because obviously, see, right, for every system, everything looks good on paper. When you backtest it, everything looks fine. But then when you actually sit to a trade, right? If you look at this particular trade that we were in, um, that big spike and we went lower. We obviously don't see that in the backtest. Nobody sees that. It's only when we live through it that you know that you go through all of the emotions or the stress related to that, right? So start small, build your confidence in the system, and then you can take bigger risks, right? That's how it goes. I also started really small. I always find that whenever I go big, the market will always punish me, no matter how good the setup is, right? You can't. Risk is the most important thing. You have to control that, right? Once you start doing that, you'll see a big difference in your trading. Whenever you go above what you should be taking, you make dumb decisions. You will exit at the worst possible time in the trade. For example, right here, this is where if you had a lot of risk, right, you would have exited at the end of the Trump tweet day, right? And from there, you'd have seen the market go up, what, 200 points, not 200, okay, 150 points or whatever, right? So that's why you need to make sure that your risk is manageable. That's the only way that you're going to think straight, right? And we are trying to be as unemotional as possible when we are in a trade. The only way to do that is to manage your size. Do I add to size when I move up the stops? No, usually no. There are rare cases where I would, if I'm not at max risk. That is the only case where I would add to the size. But in this particular trade, I am already at max risk from the entry point. So no, I do not add to size if I move up the stops. Because always our risk should be based, our trading should be based on initial risk, right? Yeah, I don't think that you should add to size if you move up the stops, unless you are not at full size already. But then that is just my perspective. Others may have a different way of doing things. I know that some of the more experienced traders do. Okay, the next question: follow XLE on Rasmatas? No, because see the RAS charts, right? It's not as simple as price, right? Because some instruments will not have options at all. Some instruments may have options, but it won't have much open interest. So there are a lot of challenges with the RAS data. ES is kind of an exception because it has got a lot of data. It's very it's very active. There's lots of volume, so we can analyze it. USO, after the big crash and crude going negative, it's really reduced in its utility. But the same would go for something like XLE also. I would think. I haven't looked at it, but then I looked at a few other alternatives to USO, and I can't find anything that really works well. So no, I don't think so. Yeah, go big, get squashed. That's right. Yeah, I have a lot of experience in doing that in my beginning years of trading. Yes, this is being recorded. So I will upload and post the link. Okay, anything else, guys? Any other questions? Why did I move to SPI from SSO? Because newbies are gonna go all in on SSO and UPRO and what all and get burnt, right? So I'm gonna keep it simple. 1x is fine. Anybody who wants to do SSO or something more can do that. But if you really think about it, what is the difference? Let's say your risk is 3%. You're risking 3%, 3K on whether it's SSO, whether it's SPY, whether it's ES, right? So what difference does it make? Nothing, absolutely nothing. Hopefully you're not risking 6K on SSO. You guys get my point? It doesn't matter whether you're doing 2x or 3x or whatever. Your risk is supposed to be still same at 3% or 2%, whatever you're using, right? So it's just an ego rush. Posting in SSO or UPRO, you see the 3x times of gains, but then in reality, on your dollar account, it doesn't make any difference at all, or it shouldn't, right? If you're trading properly, it shouldn't. Okay, so I'm going to keep things uniform, just using SPY, because from one, I mean, it helps to keep everything uniform. And also from the other side is I don't want people going on 2x and 3x and getting burnt, because that is what is going to happen. I have had experience on that. So no, I'm going to stay with SPY. Okay, any other questions? Okay, I'm going to wrap it up here. The video should be uploaded a little later today, once it gets converted and all of that. So um, that's it. Thank you all for joining. All right.